Good morning, everyone. Brian Hoops here with Midwest Market Solutions, Market Insider TV. This is our opening commentary, Tuesday, July the 1st. Good morning, everyone. Hope you had a great night and looking forward to today's trade activity. Cleanup from weekend storms continues here in Springfield. It's beautiful sunshine, warm temperatures this week. A lot of people still having a lot of down trees and power lines, and power is being restored, but it's taking quite a bit of time, all things considered. But anyway, we are seeing markets lower overnight in the grains. We're down 7.5 in corn, beans off almost a dime. Wheat is seeing a small technical bounce, 1 to 3 cents better in Chicago, Kansas City. This Minneapolis contract hasn't traded overnight, so ignore that. The other Minneapolis contract, the one that's traded on the MIAX, was down a penny and 3/4 overnight. Dollar is at 3.5-year lows overnight, down 21 points. Nat gas lower, crude oil a little bit higher, while the stock market is lower. Look at the gold soaring higher here with a little bit of weakness in that stock market. It's up $57. Silver's stronger as well with weakness in the US dollar noted. So yeah, we had a lot of news yesterday. Crop progress numbers coming out yesterday afternoon. Crop conditions, crop progress, as well as the quarterly stocks report, and we had planted acreage reports. So just tons of information hitting our marketplace, and it was one of the most boring reports I can ever imagine. In fact, this entire year, USDA reports, we kind of get hyped up about them as they'll be market moving reports, some new fresh information, and it's been a dud this year in almost all phases of USDA reports. So yesterday, almost a non-event type report released from the government yesterday. We just did not have any fresh news to give us direction. So we're looking at weather, of course. We're looking at crop conditions that are very good for corn, soybeans, and putting pressure against us in the overnight markets. So not that we can't rally later on this summer, July and August. Of course, it's going to take substantial dry weather and very hot conditions to do that, and I think we'd be led by soybeans, soybean oil, maybe corn as a follower, if in fact we get that type of weather. But the weather forecasts, they look very good as we go into early part of July here. In fact, through mid-July, the weather maps look nearly ideal. We're above normal temps, above normal precip into the second week of July, and that is giving us this greenhouse type effect that we're seeing some very good growing conditions around the Corn Belt. We have more deliveries overnight, 503 contracts of soybeans, 642 meal, bean oil 7, Chicago wheat 193, Kansas City 310, Minneapolis just 1 contract, no oats and no corn were tendered. Ag Rule raised their estimate of the safrinha corn crop to a new record, 103.4 million tons. That's up about 2 million tons from their previous numbers, while overall production increased the same amount. This is a huge crop, big problems for the U.S. and our exports for the rest of the summer, as we have a lot of Brazil production going to hit the U.S. and other foreign buyers. It's going to be a very slow go, a tough go as we go into the summer, rest of the summer months as far as our exports. Census Crush report comes out this afternoon, 2 o'clock Central Time. Census Crush should expect to be a big increase from last year, 204.9 million bushels, and this crush should be somewhat supported, but overall largely ignored by the trade. Crop conditions out yesterday, as we noted, we're seeing multi-year high here in the corn. 73% of the crop is now rated good to excellent. Last year we were 67. Has analysts bumping up their yield potential along with bigger acres being planted, and figuring we could go much lower this year than we did last year. Soybean conditions 66% good to excellent, almost identical to last year. Not much of an improvement there, but we did see a big improvement in the corn good to excellent ratings. I think soybeans should have improved and probably will by next week. As far as spring wheat goes, 53% of the crop is good to excellent, well below last year, and down 1% on the week. And winter wheat harvest is now 37% done, above estimates. We're really pushing aggressively here with the hot conditions, and last year we were 54% done at this time, so still way behind on this double crop soybeans that need to be planted afterwards. the full write-up is in our newsletter if you want to take a look at the crop conditions, a little bit more detailed numbers. So yesterday afternoon it was announced by Secretary of Agriculture Brooke Rylands they are going to do risk-based port reopenings. And that should mean cattle and bison and horses from Mexico beginning next Monday, starting with Douglas, Arizona. It's not going to be open the border, just let everything through, but it is going to be slow migration of cattle coming across the border that could and probably will put a little pressure against the deferred feeder cattle futures this morning. This week's cattle facts show list, it's up 3,500 head for a total of 231,000 head. Cash probably going to be a little softer this week with the holiday on Friday, 4th of July holiday. The next week I would expect to see cash start to rebound. As packers have positive margins here to work with, and should see those tight supplies showing up once again when they want to expand to the full kills. They'll have a tough time doing it without paying higher cash money. Have a good day, everyone, and good luck and good trading. Hope to talk to you soon. This has been Brian Hoops with Midwest Markets.